I'm excited for today's episode, and I think you will be too, because it gets into something founders, operators, and investors are all trying to figure out right now. What does value add capital actually look like in the drinks business? Btomorrow Ventures is the venturing arm backed by BAT, but it's built very differently from most venture funds, even corporate-backed ones. Yes, they invest capital, but more importantly, they help founders scale by plugging them into real operating infrastructure, growth marketing, data, distribution, talent, and commercialization support that most early stage brands just can't access on their own. This is especially relevant right now as drinks shift towards functional, well-being, and better-for-you categories, and as founders realizing that who you take money from can matter just as much as how much you raise. So today's guest is Karen Shun, who leads consumer investments at Btomorrow Ventures. She has a front row seat to what's actually working and what isn't as the next generation of drinks brands scale. Welcome, Karen.
Hey, Erica.
What drew you specifically into venture investing at the intersection of CPG and innovation?
Well, I suppose to start, I like to think that I'm a creative at heart. So growing up, I'd always been very design focused. Cue in the back if you can see anything. I dabbled in music and then later in theater, filmmaking, and acting. So for me, all those things involved storytelling, and that was basically at the crux of all those endeavors. But if you look at my career timeline, it's a little bit less creative in that sense. I had worked in investment banking and then in private equity, which shaped my experience and desire to continue as an investor, but specifically in the consumer space and what innovation means for this category. On the outside, it seems like you need to be fairly simple-minded to succeed here. In comparison, I guess just more technical spaces, like, there's a lot happening in AI right now. But for me, I'd always thought that CPG was a category which you need to be able to be smart, but in a different way, right? You need to excel at storytelling, design, and brand. And these are all areas which I had a passion for and ultimately where I felt many of my strengths converged.
Yeah, I mean, that sort of creative mentality and sort of startup mindset and jack of all trades can be huge in this space. So before Btomorrow Ventures, what experiences would you say most shaped how you evaluate founders today?
Long story short, I've been working at a business services focused middle market buyout shop. And that was where I saw firsthand how experienced managed teams ran their businesses and gained an understanding of how to evaluate both teams and opportunities, even though it was a later stage. And it was during that time, it was before COVID. So this is before the e-commerce boom. I had met a few friends who were starting something new. They were building a company called Dragonfly, and it was essentially a platform where you invested and acquired early stage e-commerce businesses and then operationalized and improved all aspects of the CPG value chain, but specifically within online categories. So these were products that were traditionally not purchased through e-com. And just broadly speaking, it aligned a lot closer with my interest in consumer. And it was also investing. So it was a blend of both of those worlds. And during my time in there, we developed a lot of investment theses across many categories in consumer. So it was home goods. We looked at food, chemicals, manufacturing, like thousands of companies. And at one point, I think I was pretty much speaking to a few dozen founders a week. And I remember the early days, my boss would say, I think you're actually learning a lot more than you might realize. And it's only looking back now that I think I truly appreciate that, because it is precisely through that repetition and developing an eye for pattern, I think, that shaped an experience of what actually worked for founders. You saw real life examples of like how they succeeded, how they excelled. And I think it was that experience that really shaped how I evaluate founders today. I also worked at Btomorrow Ventures, which is the Diageo-backed mentoring fund. And that's where I got into the world of drinks specifically, but that's a story for another day.
Well, for founders, executives, and investors who may be hearing about Btomorrow Ventures for the first time, how do you explain what BTV actually is? And how would you say it's different from traditional VC fund?
So I'm going to use this up to give a mini crash course on CVCs. So that's another word for corporate venture capital. So Btomorrow is the corporate venturing arm of BAT, British American Tobacco. This idea of CVCs has been around for a long, long time, but I think it's really actually only in the past like 2 or 3 years where we've seen a large uptick in both the number of funds and also the activity of those funds. Essentially, it's usually structured as an investment fund or a team that's set up within the larger corporate to help the corporate address critical business model disruptions. So like a CEO might charter this new division to build innovation like as a core competency. He'll help set vision and strategy to identify and develop innovative new businesses and solutions. There's a lot of different structures out there that big corporates have utilized to navigate open innovation. So it could be through a CVC. So it's like Btomorrow Ventures, where you're a venturing fund and you make minority investments, and you might partner with like a business development team or portfolio development team internally to support minority investing activities. There's also something called venture clienting. It's like a startup commercial partnering, but without the equity investment bit. And there's also venture building, which is literally internal incubation and co-creation with like external parties who are starting startups. And then there's also the acceleration model, which a lot of people might be familiar with, like cohort-based mentoring and resources from the corporate. To your question on how it's different. So if you think about the traditional VC ecosystem, so you usually have general partners, GPs who go out to LPs, limited partners, and raise funds to back a certain investment thesis. In this model, the GPs will have jurisdiction to make investment decisions in their ICs on like what companies to back, how to structure investments, and so on. But what's different with CVCs is you're generally more bound by the strategic guidance of the corporate. Some CVC units have more freedom to make what the investment team deems as strategic bets or even venture bets. And others need specific sign off from the corporate or the sponsor from the relevant business unit. I say BTV is a little bit blend of both because one need sign off from our sponsor on a number of investments, but we also have, the jurisdiction to play and make a few venture bets that we think would be strategic.
Yeah. Well, can you dive into that a little bit more? So you operate with both a corporate mandate and a venture mandate. So can you explain just a bit more about what that means?
So as a corporate, our purpose is to create a better tomorrow with the vision to build a smokeless world. So smokers can migrate from cigarettes to smokeless alternatives. And traditionally, BAT has sold combustibles. So these are cigarettes, and you might be familiar with BAT brands like Dunhill, Kent, Lucky Strike, Pall Mall, etc. But in recent years, they developed what we call new categories. And these are smokeless products. Again, you might have seen a lot of these. So like vapor, our product is Views. Heated products, we have a product called Glow, and then modern oral Velo. You might have seen Zyn, which is the competitor over in the US. But a part of this ambition is to commit to 50% smokeless revenue by 2035, which the aforementioned new categories that I was just talking about have a big part to play. But this is also where BTV comes in. We have a responsibility to help drive BAT's long-term strategy, which is one, that corporate mandate I was talking about, which is driving the broader business transformation, but then also the venture side of things, where we're supposed to help enhance the portfolio with future pipeline. It's through this investment vehicle, so BTV and Fund One, where we started exploring new and evolving areas that BAT had not been exposed to before. This is VC capabilities that we now are a little bit more advanced on, de-risking future opportunities with categories like tech and digital transformation. We look at a lot of consumer brands, science and R&D, and ESG initiatives.
Nice. And what are the considerations that a founder who is thinking about CVC versus another investor, what do they need to have in mind?
I think the most important thing is understanding what their investment thesis is and where their strategic priorities lie. And this is coming from myself on the other side, very tricky to navigate. I can only imagine what it's like navigating from an external point of view, because traditional VCs, they'll have on the websites, what they look at, what they invest in. And similarly, corporate VCs should have that as well. But oftentimes they're a little bit more vague about what those priorities actually are and where they intend to invest. But I think once you have a mutual understanding with that corporate venture investor, what they're looking for from a startup and how your startup might be on strategy for where they're investing, I think a founder should ask questions like they should ask any other VC, like what those core capabilities as a corporate venture capitalist they could offer. Do they run internal pilots that might be useful to explore together? What type of external specialist partners they might be able to bring in if you as a startup and the fund were to work together, and any other bespoke kind of growth services they provide, because there's a lot of different platforms. So just understanding how their model would fit in with what you're trying to build.
Nice. And then let's ground this in the practical a little bit. So, what does this look like in terms of your investments? What are some of the brands in the portfolio?
Yeah, so I alluded to a couple of those other categories earlier, but I'll go through a couple from maybe each. In consumer, we have drink brands, which some of you might be familiar with, Moment, More Labs, and True. We have snacks like Awake. They make a caffeinated chocolate. Uvit, it's a vitamin gummies brand in Southeast Asia. So that's consumer. Then we also do tech and digital transformation investments. In that space, we've invested in a company called Parallel Dots. They are an AI and computer vision SaaS platform that helps global CPG brands and retailers monitor and improve shelf performance in physical stores. So those are just a few examples.
Okay. And then I know that Btomorrow recently launched its second fund. So, what's the thesis behind this fund?
So yeah, we're now on fund two. So fund one was 150 million pounds. I mean, it was again a way for us to test and learn into some of those new categories that BTV or BAT wanted us to explore. Specifically with fund two, it's now 200 million pounds, which is great, more money. And we're continuing our mission to build a better tomorrow. And it's twofold. So it's what I would consider better brands, and then there's better habits. So on the better brands bit, I think we'll continue to invest into functional beverage and food brands, which you've seen a few of those previously, but the expansion of the scope is now including the ecosystem of supporting technologies, so brand accelerators that help the brands grow faster and hopefully become lasting household names. On the flip side, I said there was also habits. So this better habits side is supporting the transition of consumers to healthier alternatives. For example, startups that are improving the experience of smokeless products or understanding the new requirements of consumers, such as reducing our carbon footprint.
And, I know that BTV really emphasizes value beyond capital. So, what does that actually mean for a founder who's working with BTV?
Yeah, a lot of funds and CVCs out there are starting to emphasize how an investor can drive value beyond just funds. So a big priority for us in Fund 2 is now something we're calling the growth platform. I think A16Z, Sequoia, they all have different versions of this. But for us, it's twofold. I would say internal and external. On the BTV side, we are offering both pre and post deal fund operational services that connects our portfolio companies with our external network. So this is providing our portcos access to people, tools, capabilities to help accelerate. And that's probably not super unique, but there is that component, which is the external piece. And I think what's the most interesting and probably unique in our model is the internal bit, right? It's helping our portfolio companies tap into the deep industry knowledge of our experienced corporate. And not every fund, if you're thinking traditional VC fund, has that access. For a big corporate to offer, piloting. For a startup, that means they're able to work with a strategic partner to close operational, enterprise, or like functional capability gaps. I think it works vice versa for the corporate as well, because they're getting a inside look into what's out there in the world that they're not experiencing running their day to day.
Yeah. And what stage would you say that founders can get the most leverage from BTV's platform? Is it early validation, scaling, pre-integration? What would you say is the best place for them to plug in and grow?
Yeah, I think that's a tricky question, because a tricky and good question. I think every business unit within a corporate will have different goals, right? And there's a lot of value that founders can extract from a corporate like BAT and BTV's platform at all these stages. But it's, I think, aligning up front with us on what we're looking for in each of those stages and where we might be able to add the most value. So this is going to depend on whether you're like a drinks brand looking for an investment or a consumer tech startup looking to test out use case with a large FMCG. So yeah, it depends.
You've mentioned that you started an in-house growth platform rather than outsourcing support. So why was that so important to BTV's model?
Yeah, I mentioned a lot about Fund One, even though we're now offering out Fund Two, but I think Fund One gave us a lot of interesting insights to how to go about the venturing space. And there was a lot of lessons we learned that we extrapolated and are now actively utilizing within Fund Two. But with Fund One, BTV was looking at how to fill this corporate mandate of investing into new horizons. What actually were these horizons? And we didn't necessarily have all the capacity to support the portfolio companies in the way that we would have wanted to, and to tap into all those great resources I just mentioned from the corporate. So we have a lot of resources, but it's very easy to get lost trying to navigate who those experts are and how to leverage that support in a way that is mutually beneficial to those business units, because they have their own agendas and goals and KPIs to hit with that of a startup. So this year, literally 2026, we've just kickstarted this platform growth model. Annie, our managing director, she spent a lot of time last year trying to get this strategy and buy-in in place. And our head of platform growth, Tasio, he officially joined BTV this month. Well, actually went out in February, so technically January, but last month. And the idea is really to have a platform that can help us unlock growth for our portfolio companies by tapping into those resources within the corporate. And at a high level, I think there's usually two ways, or there's going to be more ways, but I think at the most basic level, I think BTV can help support the growth of portcos through, let's say, commercial partnership. So this could be distribution, this could be, it depends on what sector you're in. You could pilot different programs to use what you're building within the corporate, if that makes sense. So yeah.
Well, how about sharing an example? How has the growth platform helped unlock either growth or efficiency for a portfolio company?
Yeah, I'll go back to the example I mentioned early on, Parallel Dots. So this is the AI shelf scanning startup that I was referring to. So once we invested, we helped set up a relationship between the company and one of the business units within BAT to help them run a large pilot. And now BAT is one of their main customers. So literally using that shelf scanning tool at all the different points of sale that BAT uses, well, not all, but a select. And so that's what I mean by pilot. Similarly, we invested in a snacks company in Brazil called Mice Mew. And we facilitated a partnership with Brazil Hub to engage on a distribution agreement that allowed the company, so Mice Mew, to access thousands of point of sales and retail/convenience channels, and ultimately help that brand grow to one of the top players in the protein snacks category. So now I think going off the back of that, we're trying to leverage global, but specifically distribution capabilities in the US to help scale beverage brands. And this is in the areas we call wellness and stimulation.
And how did wellness and stimulation, those particular areas, how did they become a focus for BTV? And what are the consumer behavior shifts that you would say are underpinning this?
Yeah, so the origins of BAT's new categories exploration, ironically, I would say, started both, or maybe this is an oxymoron, started both inwards out and outwards in. So BAT operates in a very highly cash generative industry, supposedly at threat of long-term decline. No surprise, right? People should be smoking less, and eventually that revenue stream will dwindle. So to close the gap on that, the group utilized what we call wellness and stimulation and venturing, so BTV, to explore this opportunity to close in on that long-term smoke-free objective. Realistically, if you think about the big product verticals where consumers enjoy mood-enhancing products and FMC, there's only a couple out there that would actually change how we feel, right? So there's nicotine, there's alcohol, cannabis, and nootropics broadly. So those are like caffeine, L-theanine as examples. At the macro behavioral level, to your point on consumer behavior, there's this rise of health and well-being, right? We obviously just called it something different, wellness and stimulation, but BAT refined that category into something a bit more narrow on that neurostimulation bit, mind more than body. So that's hence where that stimulation piece at the end of wellness comes in. And it's driven increasingly by a range of wellness products that have come to market in the past few years. Or, I mean, it's been coming to market for many years, but specifically now people are more focused on well-being. So we're trying to capture that segment and specifically formats that are maybe less well-being and more stimulation. For example, sugary energy drinks. That's the kind of the opposite of what is well-being. So is there a way for us to make that healthier, or there's alternatives out there? That's just one example, but that's kind of our early innings of what wellness and stimulation were supposed to dive into.
Yeah, interesting. Well, from your vantage point, where do drinks brands most often misread consumer demand in these emerging categories?
I was reading something random recently, and it is going to sound quite random, so bear with me. It's called the Lindy effect. And it states that the future life expectancy of non-perishable things, so these are things that don't have an unavoidable expiration date, is proportional to the current age. So, for example, a book that's been in print for 100 years will likely be in print for probably another 100. And essentially, it's an idea that old ideas should be more valuable than new ones, or at least the longer they've been around, the more likely it's going to stick around, right? A lot of people do the exact opposite, right? There's people chasing the new diet, the new trending strategy, the new framework, but these new ideas have the highest mortality rate. Like, most will be forgotten by the next year. So bear with me again. I know this topic seems really controversial because we're talking about venture right now. It's about finding the next big thing. And the thing is, a lot of drink brands right now, they're hopping on like kind of the next new trend. So we had kombucha, we had energy, hydration, and now you're seeing with protein. As an investor, I think you need to believe that there are generational macro shifts happening in consumer behavior, because there's always going to be new trends and there's going to be innovation, right? But especially in the earliest stage of investing, you need to have conviction that there is a broader shift that is happening within a specific subcategory, at least. For example, in drinks. So if we're going to apply this, Lindy effect theory to the business of starting a drinks brand, and if you know that you're creating something truly innovative, you've already dived into understand the detail of why your proposition is important. But I think my takeaway is, don't miss the forest for the trees. Nothing novel here. Don't neglect the time-tested strategies that help businesses that survive decades continue to succeed. The fundamentals of building a successful brand. So like, who is your consumer? What is the occasion you're targeting? What is this universe? I love when I see a brand and I instantly can picture the universe that they've created. And then also there's distribution, right? Like, no surprise. Like, are you targeting distribution in a very thoughtful way? Like, looking at specific geographies, or is there a plan to, let's say, knock it out of the park in Southern California before you decide to expand nationally? So yeah, that's sort of my roundabout way of saying how to avoid hopping on the next trend.
Yeah, definitely. A lot of good advice in there. And as BTV builds its presence in the US, what would you want founders or co investors here to understand about how you operate?
Within the consumer landscape, and specifically as it pertains to strategic investments, BTV is really focused on full-size beverages and functional snacks. So the idea ultimately is for BTV to invest across a few stages. If the M&A team of, let's say, BAT is gonna, let's say, maybe acquire a number of these brands in the future, you kind of want to work backwards, right? Let's say BTV wants to come in 1 or 2 stages, maybe 3 stages before. And at the same time, you want to make sure that you're also making these earlier stage bets on promising founders and ideas that could scale much quicker when they partner with us as a fund, BTV, and that of our corporate partners, the Water Street Collective, who is our beverage incubation partners within BAT, to help drive the organic growth piece. A little bit of a push for the Water Street. So they actually launched a shots brand called Ride. And ultimately, for the both of us internally within BAT, we want to be able to leverage the strengths of the corporate to scale both Ride. So it's inorganic versus organic. So Ride, organic, right? We made it ourselves. And then a number of inorganic opportunities. So investments that BTV has made in beverage brands. I think what would be really interesting, and time will tell, about partnering with us and the Water Street is the ability to quite literally grow with us, right? You have a lot of well-established drinks incubators out there. I mean, some of them still exist, some of them don't, like Diageo, AB InBev, Pepsi, Coke. They all had some version of this at some time. But oftentimes with these partnerships, I think the last thing on their mind when it comes with beverage brands and, let's say, leveraging their DSD networks is you're like the last fry in the truck. You're like, especially if you're an early stage drinks brand specifically. With the Water Street Collective at BTV, we're growing out Ride. We have a number of beverage drinks in our portfolio. Like the question is, can we partner? Can you or can both of us partner together to help the portfolio scale? And I think being able to tap into the advantages that we offer as a corporate that has those capabilities, as well as kind of growing with us in a new category that we've not traditionally been in per se, I think is a very unique opportunity.
Interesting. And let's touch on investors. So how is it that you think about partnering with other investors, including funds like InvestBev, rather than competing with them?
Yeah, I mean, it's a whole ecosystem, right? And I'll get to the point on the partnerships, but in the venture ecosystem, I would say not many investors are looking to deploy capital into beverage. It's not generalization, but just broadly speaking, it's a very tough category for most venture investors to have the appetite for, right? Because beverage is very capital intensive. You burn a lot of cash in the process of growing. Founders and early stage investors get very diluted to get those brands to scale. So there are very few, I would say, quote unquote, serious investors, right, who have the one appetite of, this kind of risk profile. And then two, they actually know how to make the right bets in this space and help them scale appropriately. I think that's what makes our model compelling for beverages specifically. On your question with partnerships with other investors. So it's just because we're doing this doesn't mean that us investing together would not create a better outcome. So for example, we're actively working on building relationships with other investors who are looking at similar spaces. So whether that's beverage or food, ESG or digital transformation, because those really hot startups or the ones that are doing something really unique out there will have a lot of investors vying after them, right? But I think it bodes well for those startups to have a strategic on the cap table because it means they might be able to unlock added capabilities of the corporate. And that's also great for the other investors on the cap table, right? Because when we help the brand scale, they hopefully will get a meaningful uptick from their side as well. So yeah.
It's fascinating to hear how this whole ecosystem works. And that sounds so true. A lot of value to be unlocked. So looking ahead 5 years, what would success look like for Btomorrow Ventures in the US drinks ecosystem?
Specifically within the US drinks world, I think we'd love to be the go-to partner for investment and distribution and be seen as a truly value-add partner. If I could say that in 5 years, I think that would make us all very, very happy.
Oh, that's fantastic. Well, I think that's a great place for us to conclude. Karen, thank you so much for coming on the Business of Drinks.
Well, thanks so much, Erica. It was great chatting with you.
Thanks for joining us on Business of Drinks. Subscribe on YouTube at Business of Drinks Podcast. Follow us on Spotify or listen in on Apple or wherever you get your podcasts. Please tap the notification button so you'll be the first to know when a new episode drops.
And help us spread the word. Click those star ratings, give us a review, and share episodes or clips on your socials. It really helps us reach new listeners.
Finally, if there's something that you'd like us to cover on the podcast, tell us. We're at podcast@businessofdrinks.com or reach out via Instagram or LinkedIn.
We love hearing from you, and we respond to each and every message. Thanks, and see you next time.